Hello, good afternoon everyone, and welcome to this session on trading the economic news. We're just going to get ready for the reports that is due out shortly. So we'll just have a quick recap on what we've done so far today, and then get ready for the report that will be announced in a couple of minutes. So as usual, we started off with the economic calendar this morning. And we knew that we had a couple of reports of high importance due out this afternoon coming out from USA. So we had the US durable goods orders, and also the initial jobless claims report due out from the USA. And like I said, they will both be due out in about 4 minutes. And as we know, the markets usually trend sideways prior to the last report of high importance. So we're going to be extremely cautious trading the markets prior to this report's coming out. So we decide to trade carefully as we approach the markets. So looking at the Euro-US dollar, which we did this morning, the market was trending sideways this morning. We had a trade from last night, which was still on this morning, and that achieved the profit target of 60 pips early this morning, and we were able to get our 60 pips and complete our 60 pips trade from yesterday. So that was the end of the trade from yesterday. But for today, we decided to keep out of the markets because of the report coming out, so we didn't place any pending order at the time. And at the time, the market was trending sideways between the pivot point and the first support. But as we can see now, the market has broken the first support, broken the second support, and is now trending sideways. So we can see that's the low point now of the sideways trend. That's the low there, 2696. That's the low point of the sideways trend. And again, I always mark my sideways trend white. And that's the high point there of 2735. 2735. I'll just make it 2736. That's the high of the sideways trend. So that's where the market is currently trending. Let me just make it a bit bigger. There we go. So we can see now that the moving average has now descended below the first support. The sideways trend is also below the first support. So we can now use the first support as a point of entry to buy. So if the market goes up, when the report comes out, we'll buy just above the first support. So we just place our orders now because the report should be announced shortly. There we go. So obviously at this point there are no sell opportunities because you can see the market is trending sideways between these two white lines. The second support is within the sideways trend, but we don't use the second support to trade anyway using the pivot point strategy. The market itself hasn't formed the market support. If the market forms a market support, we could potentially use it to sell, but the market hasn't formed the market support. We don't use the second support with the pivot point strategy to trade. The moving average 50 is caught within the sideways trend, so I wouldn't be using the moving average 50 to trade too. So the only clear opportunity to trade, or the only safe opportunity to trade, is a buy order just above the first support, because obviously the first support is now acting as a resistance to the market. So it's now 130, so the report is now out, and we'll see how the market reacts to that. Obviously, we've made our own decision in terms of what to do. If the market falls, then there's nothing we can do. There's nowhere to catch the market falling, no clear points of entry to catch the market if it continues to fall. So there's nothing you can do unless the market forms a market support there. So pending the market forming a market support there are no sell opportunities. And the first buy opportunity is to buy just above the first support, which is where we now have our pending buy order with a 20 pips stop loss in place and 60 pips profit limit in place. So that's the plan. Any questions? If you have any questions, do click the hand button or send your questions through to the question box. We'll just give it a couple of minutes and we'll let it go. Good afternoon, sir. How can I help? Hello?
Hello, sir.
Hello. Yes, can you hear me?
Hello, sir.
Yes, I can hear you.
Yeah, I can hear you. Okay. What if we had placed a pending order by the first support this morning, since the market was trending downwards?
No, you could have. Again, it's the whole thing about trading is about you deciding what to do. So like I said this morning, it's a bit like yesterday too. You always have 3 attempts at the market every day. So you have 3 attempts to have a successful trade every day. So it's you deciding when to place your first trade and you deciding if it's a good idea or not. So again, you know that the reports are coming out at 1:30. Again, you can't trade in hindsight. So that's one thing you have to say. You can't trade in hindsight.
That's yeah. But as at this morning,
yes,
the market was trending above the first support.
Oh yeah, like I said this morning, I didn't want to place a pending sell order this morning because of the report coming out at 1:30. Because I was cautious of the fact that the market could get to the first support, break the first support, and then start to trend sideways and then lose out on that trade. Again, this is why I said there's no hard and fast rule with trading, because you as a trader could say, well, I'm happy to take that risk and risk my first attempt at that and see what happens. So that in itself is fine. So there's no problem doing that. So you can say, look, I have 3 attempts. I will place a pending sell order below the first support, knowing that there's a high risk that you could lose out on that trade. And if you're happy to accept that risk, there's no reason why you can't go for it and say, okay, if I lose out on that one attempt, which is what I do sometimes, and then you say, okay, if I lose out, I'll just stop trading and wait till 1:30. So there's nothing wrong with doing that. And then you know you only have 2 more attempts if you lose out on that trade. So again, the beauty about trading is for you to take into account all the facts at your disposal and then decide how to play without those facts. So you know the fact is that 1, there's a high chance of the market trending sideways prior to 1:30. Fact 2 is that you know you have 3 attempts to have a successful trade. And fact 3 is that, well, how much do I have? How much am I willing to lose in terms of money management? And then you then decide how to play with it. So if you say, okay, I don't mind losing 20 pips prior to the report coming out, then by all means you go for it. But if you say, look, I don't want to risk my 20 pips or $20 before 1:30, then you don't go for it. So it's making those judgments. That's why it's really a judgment call when it comes to trading. So there's really not a yes or no answer. The answer really when it comes to trading is you taking all the facts in front of you at that point in time and then deciding what you're going to do and where you're going to place your trade, how much you're going to risk. Because again, if you go back to money management, regardless of all your analysis, there's always a 60% chance you're going to lose on that trade anyway. So it's always remembering that. So regardless of how perfectly you analyze the market, what wonderful analysis you do, once you place that trade, there's a 60% chance you're going to lose that money. Obviously, the chances of you losing that money become higher if you do it prior to a report of high importance between 9 and midnight, during public holidays, within a sideways trend. So that risk becomes higher when there are other factors involved. So you just have to judge based on those factors whether you place that trade at that point in time or not. And usually that's actually the good way to look at trading and looking at it going forward. So although you have 3 attempts, every attempt you make trading the market, that's the way you need to look at every attempt you take. For your first attempt, your second attempt, and your third attempt, all of them should be carefully considered, taking all factors into consideration before you place your trade.
Okay. The other thing I want to ask, using moving average.
Yes. Yeah.
What will have been your entry point, assuming you intend to place a buy or a buy order on this trade as it is now?
It will just be 2 pips above where the moving average is now. So, for instance, now, if the report wasn't due out and the moving average wasn't caught up in a sideways trend, yes, I would have. If I just place my cursor here, the moving average at that point in time was 2721. So I'll just place the pending buy order at 2723 or 24. So I've gone buy 1.2724, and again 20 pips stop loss 1.2704, and oops, what am I doing? Wrong place. 1.2704, and the profit should have been 1.2784. Obviously I can't place that now because it's below the market, but yes, so that's what I would have done, and I'll just keep adjusting that order along with the moving average every 5 minutes, because obviously I'm using a 5-minute time frame, so the moving average figure will change every 5 minutes. So I'll just keep adjusting it till the market takes it. But like I said, because the moving average was within the sideways trend, that's why I did not use it. So again, just remember that you don't trade within the sideways trend. So I just ignore whatever indicator is within the sideways trend. But yes, that's what I would have done if I want to use the moving average. Alternatively, if you want to sell using the moving average, again, you put your cursor where the current market is. The moving average is now 2721, so you can just sell below that at 2720. $1.2720, and stop loss 1.2740, and profit limit to be 60 pips below, and then you place it. And again, same as before, if you want to keep selling below that, you just keep moving your sell order till the market takes it. So I guess that's the thing about the moving average. Although it's a good way to trade, the only downside with that is that you need to be in front of your computer or your laptop, and you have to keep adjusting your order till the market takes it. Unlike the pivot point, which is a fixed point in the market where you can place your pending order and go away, with the moving average you need to keep adjusting your pending order till the market takes it. So if you know you're not going to be sat in front of your computer for the next couple of hours waiting for your market to take your order, then it won't be a good one to use, because remember, it's a moving average, so it keeps moving, it keeps changing, so you need to keep adjusting it. It's a bit like what we had this morning, yesterday, with the swing trade. So you can see with the swing trade, the reason why I like using it for the swing trade is because I only have to adjust it once a day, because it's a daily time frame I'm now using. So we can see here the moving average now is 3194. 3194. I usually put a marker there so I know where it is when I'm day trading. So 3194. So you can see we just have to adjust that order now to 2 pips or above that at 3196. So we go to our order from yesterday and just modify it to 3196. 3196 at the stop again, 3096. And that's all you just have to keep doing every day till the market gets there and takes it. And it's the same same principle too, even with day trading. You just have to keep adjusting that pending order till the market takes it. But again, remember, you don't trade within a sideways trend. So like I said earlier, because the moving average was caught within the sideways trend, that's why I'm not using it. Otherwise, I could have used it.
Okay.
Okay. Any other questions?
All right.
Thanks. Let's see, there's another question here. Let's see. What's the opposite market set of, I'm not sure what that question is. So what's the opposite market set of Euro US dollar? I'm not sure what you mean opposite market set. I haven't set anything opposite to the market. That's the only pending buy order I have for day trading. So from a day trading point of view, that's a pending buy order just above the first support. We don't have a sell order. From a swing trading point of view, go all the way. So from a swing trading point of view, we've got a pending buy order just above the moving average 50 from the daily time frame. So I think that's all we have on the Euro US dollar. Okay. Any other questions? Okay. Hi, Kemi. Hello? Can you hear me, Kemi?
Yourself, yes.
Hi. Good to hear your voice.
Hi. I think I had myself on mute, actually. So, yeah. Remy, the question really was, and I know that you've mentioned it to me before, but I've clean forgotten. There's an opposite to each market set, isn't there? So obviously we are trading
okay.
Euro.
Yes. Oh, yeah. That's it's a good thing you said. Yeah. Usually you find that the Euro US dollar trends, same way with the pound dollar. So you can see the pound dollar has the same trend as the Euro and the Aussie dollar. So they tend to trend in the same direction. The Aussie US dollar, the pound dollar, and the Euro dollar. And you find that the Euro yen tends and the dollar yen tends to trend in the opposite direction. Oh, sugar. Oh, no. Sorry, apologies. Kemi, are you still there?
Yeah, I'm still here, but that's
So
fine actually, Remy. You answered my question.
yeah, I lost connection that way. So yes, but again, don't forget, you don't use the word always or never with trading. So in fact, you can see, although the euro yen tends to go in the opposite direction as the euro dollar, pound dollar, and the Aussie dollar, you can see it's going in the same direction this time. So yes, that's the answer to the question. Euro yen, dollar yen, they go in the same direction, and Aussie dollar, pound dollar, euro dollar go in the opposite direction. And the stock indices tend to go in the same direction as the euro dollar, the pound dollar, and the Aussie dollar.
What about the Swiss something or another?
Oh yeah, the dollar Swiss, yeah, they go in the opposite direction. It goes in the opposite direction to euro dollar, pound dollar, and Aussie dollar.
Okay, fantastic. That's great stuff. Thanks a lot.
Good to hear your voice.
Likewise. Take care.
All right, take care. Hello, Andy. Are you still there, Andy? I can see your hand up. I don't know if I've lost you.
Hi, Remy.
Oh, hi.
Hi. Oh, great. You can hear me.
Oh, yes, clearly.
Hi. I'm using my iPad for this, so this is the first time I'm picking you up on this.
Good.
That's why. That's great. Maybe I'll be joining you now more often.
On
Basically,
the iPad.
where's your pivot point on this platform?
Oh, no, you have to, unfortunately on this platform, you have to draw it yourself. So you have to use the horizontal lines to draw it.
Oh, okay.
So you have to use the horizontal lines.
So where's your drawing for today? What's your number for today?
That's it there. So you can see my first support is 1.2748.
Okay.
And this
1.248. Yeah.
And the second support is 1.2716. And the pivot is 1.2805. Actually, let me show you something that might be very helpful. If you go to our YouTube channel, let me just quickly show you that.
Yeah.
Because that would then help it to go into detail of how you can draw your pivot points onto the charts and use it on the platform.
Okay.
So, oops, sorry, I'm going to the wrong place. So if you go www.youtube,
Yeah.
youtube.com/dkbMARKETS.
Okay.
So yeah, so our handle is dkbMARKETS, youtube.com/dkbMARKETS. And if you go on there, you'll be watch the video and you can look for, there you go, pivot point strategy.
Okay.
Where is it? I saw it there somewhere.
Okay, trading analysis. Okay.
Yeah. So there's pivot point strategy and using the MT4 trading platform.
Oh, okay, I've seen that.
Yeah.
Okay.
So and then the
I'm
pivot
going
point.
to try that period. Yeah.
Yeah. So that will help give you some more detail.
All right.
I think I've lost.
Right.
Okay. So okay.
So depending on that is on false support now.
Yes. It's just above
from
the first support.
SP1.
Yes.
Oh, okay. All right. Okay. It's 12748. All right. Try that on my other platform also.
Okay then.
Okay.
Take care.
So yeah, I can do that.
Let's see if any other questions in the question box. Stock indices, yes, like I said, the stock indices trade in the same direction as the Euro US dollar, the pound dollar, and the Aussie US dollar. So the Aussie US dollar, the Euro dollar, the pound dollar, they trade in the same, they tend to trend in the same direction as the stock indices. But again, don't use the word always or never, because at the moment now the markets are all over the place due to all the uncertainty going on in the world. Still with the Eurozone, the problem with Ukraine and Russia, the problem with the Islamic militants. So there's so much uncertainty in the world now that everything is out of sync. So you just tend to stick with your plan and the trend of the market you're trading. Okay, any other questions, comments before we go for break? I was going to say breakfast, lunch. Good. No more questions? Brilliant. So have a good lunch. Like I said, that will probably be the only trade we'll be placing today, this pending buy order above S1. I don't think I'll be placing any other trades today. But obviously, if things change, I will send you an email. Otherwise, we'll see or speak again at 8 p.m. All right, so have a good afternoon, everyone. Take care and speak later in the evening.